And he's been trading shares of Robinhood, but closed his position as of yesterday, which may look like at least a great short-term trade. Tom, why'd you do that?
Well, actually, I didn't close it yesterday. I closed it the day before, so I missed that move.
Oof.
So it wasn't. But I bought the stock after the opening IPO. I didn't participate in the IPO. I bought the stock, Andrew, because I thought it opened too cheap. I thought they priced it right, which I think was a really good thing. I liked the way they did the allocation. I liked the way they did the IPO pricing. I thought it was a little cheap, but I only took a couple of bucks out of it. I mean, it was just a trade. I'm a trader. I'm not a. I don't have a long-term perspective.
Tom, speak, though, to the news this morning. The company effectively creating a secondary. This is not money that's going to go into the pockets of the company to be used to expand or pay down debt or pay for anything. They don't have. But it is going to be used for insiders, private investors who were in this company earlier to be able to sell. What do you think the investors should make of that? Stock down, we should say, about 10% on that news.
I mean, it's down 10% off of probably a little bit of an unreasonable close yesterday. So I don't really read too much into it. I mean, as a former CEO of a publicly traded company, I never like it. I mean, I would not like to have to make an announcement that we were doing a floating stock in order to let people out. I mean, that would not be my favorite, PR piece to push out there. So I don't read too deep into it. I think this was probably negotiated way before, Robinhood went public.
So, Tom, the other piece of this, though, is how do you avoid becoming a meme stock? Or do you think that being a meme stock is a good thing? We talked to Joe Terranova earlier today, who said, look, if you don't want to be a meme stock, what you need to do is actually do a secondary where you're actually selling to the public to try to tamp down the stock so that actually the meme buyers get out of the stock.
Yeah, I don't know if, in Robinhood's case, whether you want to call it a meme stock or you want to say, hey, what's that mojo worth? Because, Robinhood has a lot of things that have been, Robinhood's a business that is really commoditized, but it has something special in the sense that they have this virality that nobody else in the space has. I think John just talked about it a little bit. And so what's interesting about Robinhood is, can they reach that valuation and how fast can they reach it? And I kind of think yesterday's move was something a little different that a lot of people aren't talking about. I think that there was some regulatory clarity around crypto yesterday with all the stuff that Gensler was talking about. And I think that the street and even the meme stock players look at Robinhood potentially positioning themselves as a crypto powerhouse in addition to an option powerhouse. I mean, that's really their two major sources of revenue. And so I think that had a little bit to do with yesterday's rally.
When you think, though, about Robinhood and specifically in the case of crypto, do you think that they're going to be able to hold their margins? I mean, that's one of the big questions.
No, I don't think they are. In fact, crypto is highly correlated to implied volatility. And implied volatility of crypto was running about 4 times the S&P volatility. Now it's running about 3 times, but it's dropped from 100 and something down to 50 something. So when you lose that much volatility is just expected move. And people buy crypto because you can risk 1 to make 2 or 3. When you're risking 1 to make a half, it's a lot less interesting. So crypto volumes have fallen off they've fallen off the map. But there's not that many brokerage firms in America other than Tasty and Robinhood that offer crypto embedded in their platform, unless you go to a crypto platform like, Coinbase. So they kind of have a really dominant position right now.